What happens if you ignore an IRS letter? Imagine checking your mailbox. Mixed in with the bills and advertisements is a plain white envelope. It says one thing in the corner: Internal Revenue Service. You stare at it for a second. Then you toss it onto the counter. I'll deal with it later. A week passes. Then a month. Eventually, you completely forget about it. It seems harmless. After all, if you don't open the letter, how can it hurt you? Unfortunately, the IRS doesn't work that way. Ignoring an IRS letter is one of the most expensive mistakes people make, not because the first letter is usually terrible, but because what happens next gets worse every time you refuse to respond. Here's exactly what happens. Stage 1, nothing happens. At first, this is what tricks most people. The IRS doesn't immediately freeze your bank account. No agents knock on your door. No one calls. Life continues exactly the same. That silence makes people think they got away with it. They didn't. The clock simply started ticking. Many IRS letters are actually easy to resolve. Sometimes they just need clarification. Sometimes they need a missing tax form. Sometimes they simply want you to verify information. Responding early can often prevent much bigger problems. But every day you ignore the letter, interest can continue to grow. Penalties may begin to accumulate, and your options become smaller. Ignoring the problem doesn't pause it. It usually makes it more expensive. Stage 2, the follow-up letters. The IRS assumes you may have overlooked the first notice, so they send another. This one usually sounds more serious. Then another. Each notice becomes more urgent. The language changes. Deadlines become clearer. Consequences become more specific. This is where many people make another mistake. They think, if they really needed me, they'd call. Not necessarily. The IRS primarily communicates through official mail. If you ignore those notices, the process continues without you. And once certain deadlines pass, some decisions may be made based only on the information they already have. Stage 3, the bill gets bigger. Time is expensive, especially when taxes are involved. If money is owed, interest generally continues to accrue. Penalties may also increase depending on the situation. That original balance can slowly become much larger than the amount in the first letter. This surprises many people. Not because they didn't owe money, but because waiting made the bill far more expensive than it needed to be. It's one of the hidden costs of procrastination. Stage 4, collection actions. If the issue still isn't resolved, the IRS has legal collection tools available. Depending on the circumstances, they may place a federal tax lien or issue a levy after providing the notices required by law. That can potentially affect wages, bank accounts, or certain property if the matter remains unresolved and legal requirements are met. Most people think these actions happen overnight. They don't. They usually happen after multiple notices and opportunities to respond. The frustrating part? Many of these situations could have been avoided much earlier. Stage 5. The stress becomes the real cost. Money isn't always the biggest price. Stress is. Every trip to the mailbox becomes uncomfortable. Every unknown phone call creates anxiety. You wonder if things have gotten worse. You lose sleep imagining the worst. Ironically, opening the first letter would have taken 5 minutes. Ignoring it can create months, or even years, of uncertainty. Here's what you should actually do. If you receive an IRS letter, don't panic, but don't ignore it either. Open it. Read it carefully. Most notices explain exactly why they were sent and what deadline applies. If you agree with the information, follow the instructions. If you disagree, respond before the deadline and include supporting documentation if requested. If you can't pay immediately, the IRS offers options in many situations, including payment plans for eligible taxpayers. The worst decision is pretending the letter doesn't exist, because the IRS won't forget, even if you do. The bigger lesson. This isn't just about taxes, it's about human psychology. We naturally avoid things that make us uncomfortable, but avoidance rarely makes financial problems disappear. It usually gives them time to grow. Whether it's debt, bills, investments, or taxes, small problems are almost always cheaper to solve than large ones. Sometimes the most profitable financial decision you'll ever make is simply opening an envelope. If you found this video helpful, subscribe to Broke by Design for more videos that expose the hidden financial mistakes quietly costing people money every day.